Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. Let's see what we got here. This is by Christian Larson. Live in faith that the whole world is on your side so long as you are true to the best that you can be. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 168. NASDAQ is up 44. S&Ps are up 19. Gold contract down $3.50, traded at $1,218 an ounce. Silver down 6 cents at $17.71 an ounce. Platinum off 13 at $1,318 an ounce. Copper flat at $3.05 a pound. Light sweet crude up $1.44 at $93 a barrel. Bonds, you have the 10-year down 7 ticks at 124.09. 30-year down 17 at 136.28. King dollar up 371 ticks at 85.15. The euro is down 64 at 127. The yen is trading flat at 108.98. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, we got down to 1982. Your swing point is 1978. Didn't make it to the swing, and I suspect we're going to have lighter volume, so that's going to be it's going to be a rejection of lower price on lighter volume. You take a look at the SPY. What you have with the SPY is this. Your benchmark out there, well, this is where this gets interesting. Your benchmark is 76 million at 198.38. You get to 197.52. But when you're that close to a couple other, meaning higher volume days, you got to take the higher volume days. So you're actually coming into a $117 million day with basically about 86.90. I don't expect we're going to get to highs out here, but no doubt, as one of our tigers just said in the den, he saw the 3 little bears running into their bomb shelter. Bottom line is that that's a fact. That's on your S&Ps. We go over to the NASDAQ composite. What we have with the composite is this. Inside the composite, you have the composite right now that's up 44 bucks, and the composite is going to come in at, and the volume characteristic today is going to be important. Yeah, see, this good. And here's that diversity. The composite, folks, is going to be going up on lighter volume, so that's saying it wants to go lower. The S&P got to a lower low on lighter volume. That's saying that it could go up to a high. I suspect even coming into this close out here that we're going to see a little selling, and the reason being is that what we've done is this, is that we got over the highs of the open of yesterday, which is 199.20. We're coming into the 199.63 area, and that is where it had the first leg down. It was 199.76 to be exact. So we'll see how this shakes out as we come into the close. The Dow Industrials, that's where the juice is. If we look at the indices themselves, the Dow Industrials are up a full %. You have NASDAQ up a full %. The S&Ps are up 0.7%. Now, what gets interesting, and this is where percentage-wise what can happen going down versus going up, is that the past 3 days you were slightly lower. We weren't down 1%, but yet the S&P, we're at 1998. The S&P, we were only down 0.6% yesterday, and it took a full % to basically make that back. So this is where that gets interesting as to what it takes to make something back versus on the way down. Gold contract. We go over and take a look at gold. What we have with gold is this. Gold contract today is down $3.60. 124,000 contracts are traded, and it looks like the high of the low, which is that 1221, we're into that. That makes that 1208 is open for a test. Bond market. We go take a look at the ever-ready bond market, and we start with the 10-year. When you take a look at the 10-year sideways move out here today. 911,000 contracts, and it's going to be a lot more contracts than that to break downtown. You're breaking into 1.6 million. So a 10-year bond still wants higher price. We'll go look at the 30-year bond. What we have with the 30-year, same setup there, 241,000 contracts traded thus far. We're at 136, and that's going to need, in order to break downtown, you need, let's see, 404. You know, so it's not even close. Now, King Dollar, the King Dollar, oh baby. So check this out, folks. King Dollar breaks topside, and we have done it with basically light volume. You know, if we look at this, so picture something. First off, King Dollar had done exactly what it should have done. A to B equals C to D, goes to the swing point, goes there with volume and conviction. What that says is that, guess what, it wants to go higher. But when you go somewhere and do the full price projection, and then, which King Dollar had done, King Dollar, you know, bottom line, had tested that area. On the 17th, we got to 84, 86. You had 66,000 contracts there. You end up testing that with 18,000. Wouldn't back off, though. And that's the key, that it wouldn't back off. So watch this. We take this and we put this on a continuous contract. And this is going to be the heads up. Well, it's not, it's a heads up, but it's like, okay, what does it actually mean, and what is it going to mean for the markets? We take a look at King Dollar. And if I put this back, I'm going to put this back on a 5-year weekly. What you have is that your swing point on the continuous contract is 84.96. Now, we're at 85.13. If this King Dollar does not back off and goes straight up to 89 where it wants to trade anyway, let me tell you something. I suspect that all markets would take conniptions, not just U.S. markets. The reason being, folks, is that the fast move in currencies, and it doesn't matter what, well, it would matter what currency. A fast move in the euro, which you have here. The euro, you get a total breakdown in. Dollar wants to go higher. Euro goes to lower prices out here. The euro has gone straight down from 139 or 127. And what that does, it throws a wrench inside large multinational companies. That's the bottom line. So we'll see where this whole thing is going to shake out coming into the, well, as to, is it going to back off, build some cars not at a higher price, or is it just going to go for it? If it goes for it, folks, you know, get ready for some, we have volatility in the market already, but you get ready for some amazing volatility. Some of the Dow stocks. So we have with the Dow stocks is this. You have American Express up 18 cents. In fact, if we look at the Dow stocks, I believe every Dow stock is up except General Electric right now. Oh, actually, you get Chevron is down 40 cents. GE is off 6 cents, and you get ExxonMobil off a penny. The rest of them are all up. Putting strength into the Dow Industrials today is that you get DuPont up $1.82. Walmart is up 168. Walmart is getting into the banking business. They've been in the banking business, folks, but now you're going to see them in the banking business in a big way. They, it's called Green Dot, I believe. And I don't know if they own it or what. Here it is. Okay, so Walmart reached a deal with a prepaid card firm Green Dot Corporation to offer checking accounts to retailers' customers, building on an expansion into financial service that U.S. banks have sought to block. The accounts offered through Green Dot's banking unit are linked to MasterCard, debit cards, and don't charge overdraft, minimum balance, or monthly fees when customers use direct deposit. Said today in a statement they will be available nationwide by the end of October. This is going to be a huge deal, folks, okay? Because the bottom line is that that segment of the populace needs banking, period. The banks themselves have been charging them outrageous amounts in the context that they want people to bounce checks and to get the fee structure going. And it looks like just reading that structure, what you are going to have is that you're going to have an aspect that they're going to be able to service folks without fees. That may cost a few more dollars, but what I expect they're going to have, and this is where technology is going to aid not only a huge amount of the populace, it'll aid both Walmart and Green Dot. And what I expect you're going to see is this. So picture something. If we go back in the banking system in general, that, you know, first you had checks, and, you know, basically checks wouldn't go through for, what, 3 or 4 days. Then you had you stay right there. We're going to walk through this. This is Tom O'Brien. This is TFNN. Right now, you get the Dow Industrials up $1.60. NASDAQ up 44. S&Ps are up 18. Gold trading at 1,218. Silver at 1771. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, I get the Dow Industrials up 163, Nasdaq up 45, S&P's up 19. And as we do each and every Wednesday at 20 past the first hour, we have our man, Mr. Daryl Martin. Daryl does an outstanding show every trading day right here, 1 to 2 Eastern Standard Time here at TFNN. And don't forget, folks, all the programming at TFNN you can get right on your cell phone. All you do is you put TFNN.mobi in your browser. You're going to get the full audio. Live content every trading day, 8 in the morning to 6 in the evening. If you want to get Tiger TV, just go to TFNN.com, hit the TV. You can check it out. Daryl specializes in the Nadex platform. He's out there trading it every trading day. And when we talk the Nadex platform, folks, we are having a trading competition next week. It's free. We're giving away $10,000 in cash. Now, you only have till tomorrow at noontime to sign up. And the reason for that, folks, is that we have to basically make sure everything's all right on Friday before we bring this thing live on Sunday. So if you'd like to get in that competition, it's free. Go over to our website at TFNN and then absolutely listen to Daryl's show each and every day at 1 o'clock, because he can't trade inside the competition. He's trading with real bread, as we are, but the bottom line is that he'll certainly be setting up some nice trades for you. Daryl Martin, what's going on?
How's it going, man?
Going great, man. It's volatility in spades here. There's no doubt about that. I mean,
it's freaking awesome.
Yeah, there's no doubt. When you're talking movement inside these contracts, folks. So a lot of these contracts, folks, are 2-hour contracts, and the bottom line is that, you know, whether you're bullish and or bearish, okay, there's many things that you can do. Meaning in the indices and the commodities and the currencies, and you know. You talk about movement. This movement in the currencies are just amazing, man.
I mean, yeah, we've had massive moves. We've had deviation up and down moves. I mean, the commodities have been rocking it lately.
Yes.
Had some good indice movement. It doesn't matter what you're trading right now. It's been like we've had some great volatility.
Yeah, there's no doubt, and you know we'll see. You know, this S&P, folks, there's no doubt it's the Teflon market. It just refuses to go down, and it's like, oh man, I'm telling you, it's over and over again. There's no doubt about that. So, hey, so inside the Nadex platform, right? We got a lot of folks signed up. The switch is going to get pulled on Sunday. You know that they can start trading Sunday. I suspect most of them are going to start trading Monday morning. And as you go through the trading day out there, can you just walk them through the differences, whether they're going to be trading commodities or currencies or the indices, where they might want to be basically looking?
Well, I mean, if you're going to be trading around news, that's going to be your Forex pairs.
Yes.
You know, I talk about news almost every day.
Okay.
And then on the commodities, I'd focus more like on gold and oil.
Right. Because the spreads are so tight too, right?
The spreads, they're more liquid markets. The spreads are tighter.
Right.
And, you know, they're a little bit more predictable.
Yeah.
You know, if you start getting into natural gas, you know, it has those 3% moves, and that premium's built in. You don't have the edge you think you'd have.
Yes.
The premium's there.
That's great to know. Right.
And, you know, and I mean, the great thing is, trading on this competition, I mean, you know, some people are like, oh, well, I work and stuff, and it's the market's open at 6 p.m., and it's open till 4:15.
Right. Right.
Sunday, by the way, only Forex is going to be open. So the commodities and indices open at 3 a.m. on Monday.
Okay, perfect.
So, you know, for those of you who want to get a head start on Sunday, you know, you're going to go right to the FX pairs.
Yeah.
Okay. And then there's a couple binary FXs that stay open till 5, but most of them close down at 3.
Yes.
Pretty much all the commodities close down like at 1:32, like 1:30 on, you know, the metals, 2:30 on the energies.
Right.
And then you have your indices until 4:15 every day.
How good is that, right?
Yeah. So I mean, there's a lot of opportunity. It doesn't matter what your schedule is. You want to come in at night. You want to come in on the weekend. And one of the biggest things I've been stressing is when they come in to place their trades, you know, don't get discouraged if you're behind. You can still actually win real money on this thing.
Yeah, I know. Seriously, folks. What's going to happen? So the first place prize is $3,000. Second place is $1,500. Third $750. Fourth and fifth is $500. 6th through 10th is $250. And then each trading day, Monday through Friday, we're going to give out 5 $100 cash prizes plus the art of time in the trade. And the daily prizes, folks, is just for trading. It's a random number's going to come out, and basically we're going to give it away. So, and as Daryl just said, you'd be absolutely amazed that what can happen in just a few trades. And the key is that, of course, you've heard this a million times, the trend is your friend. Some of these currencies, when they go from one contract to the next, you're going to be really surprised. These trends have been pretty long right now. And it can basically keep going that same way, which is absolutely amazing.
Yeah, so and they go and they take the trends. I mean, you can do trades that only last 5 or 10 minutes and the last like 15 minutes of expiration.
Yes.
So you don't have to be sitting there all day to place trades. I mean, you can place a trade on your lunch break.
Yeah.
So, you know, and I mean, and you can go in and you can do 10 orders at a time. I mean, you can layer in on those however you want to do it, but you know, it doesn't matter whether you're trading 8 hours a day, you're trading at night during the day, you know, for 15 minutes, and that's sort of the point of the competition. is to get everybody, have a chance to actually make some real cash.
Yes.
Whether you rock it or not, right?
Oh, there's no doubt. There's no doubt.
Because we give basically 5 random drawings if you just place a trade every day. And it's just to get people to check it out, see what it is, make it fun, and let them see that, hey, you don't have to, you can trade all day, you don't have to trade all day. Whatever your schedule is, Nadex has a market for you. And
folks, when you sign up, what you can also do is go test drive Daryl's Analyzer, because if you haven't test drove that yet, the bottom line is that what you're going to get out of that is that if you are bullish or bearish, whatever that is, it doesn't matter. It's going to explain and tell you what the best contract is to trade at that price point in order to basically get a larger reward versus your risk. And, this is a great time to try it, because the fact of the matter is, as we were just talking, is that, yes, you're going to be trading with funny money, but guess what? You're trading with funny money for real money, So right. You want to do the best job that you can do. And, inside that context, you really can plan out some trades, which is going to be really cool, man. And we certainly have the volatility, which is just so sweet, man. It's amazing. So, yeah, with volatility. And, one of the things that we talked about this, I think, a couple weeks ago, is it doesn't matter what the volatility is. Even the binary itself can be volatile even when the market's flat. So, whether we have great volatility next week or we have low volatility next week, you always have volatility, at least in the instrument, if not in the market itself. That's a great point. And the reason for that, folks, is that as Daryl, if you listen to his program, he's got an outstanding program, and it's. He had what's so funny, Daryl, is that the time of your program is perfect for Nadex almost. You know what I mean? It's just funny how it works, right? Because we'll have Fed funds rate, we'll go in, we'll have lunchtime, and sometimes I'm doing trades that are 10 minutes long. We're in, we're out of the trades. And that's my point, folks, because what happens is that the volatility that he's talking about, something can be out of the money and flipping right into the money, and the volatility on that trade is insane. And we're only talking movement of 2 or 3 points, but what you're talking is time here, okay? And when you get both of them together, you can risk a very small amount in order to basically get a large amount in the aspect of that time structure. Because, if you're out of the money and there's only 10 minutes left in a contract, well, guess what? If it goes in the money, guess what? All of a sudden, something that was worth 0 can be worth 1, 2, 3, 4 times, whatever the contract you're dealing with. So it's pretty intense. Awesome. Now, you got to make sure they register. So do it now, right? Do it right now, because you know what, folks? There's nothing like now. And, you don't want to be late, because what's going to happen, by the way, is that the computer's shut off. And we're not going to shut you off. The computer's shut off at noon Eastern Standard Time tomorrow. Darryl, have a great one, safe one. Look forward to the show tomorrow. All right, look forward to it. Come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now I get the Dow buck 60, Nasdaq up 46, S&Ps are up 19. And don't forget, folks, if you want to get a shot at winning some real cash, just come over to our website at TFNN. You can register for the Nadex contest. We're giving away $10,000 in cash. You have to do that before noon tomorrow. Once you do that, by the way, you get into the Tiger's Den absolutely free for the full contest. And tomorrow night from 6 till 7, I'm going to be doing a workshop, and you also get that. We were talking about Walmart getting set up with Green Dot and basically getting accounts open, banking accounts, getting in the banking business. So if we look at the banking structure where we've been, you know, whether it's years ago, you're dealing with checks, and checks took 3 or 4 days to clear. Bottom line is that a lot of bounce checks, a lot of things happening on the clearing process, right? There's still many banks today that basically don't clear your checks for a couple of days, which is pure BS, folks, because the bottom line is that you can get a cleared check in the matter of minutes, not even hours. So what I expect you're going to have with Walmart is this. And so there's a whole segment of the U.S. that has a hard time getting checking accounts, number one. And when they do, you know, the bottom line is that they get hit with fees left and right. I expect what you're going to see out here is Walmart themselves, number one, understand that aspect, understand that customer, and are going to take care of that customer. And now watch, that's the short-term plan. And I'm speculating this. The longer-term plan on that, to me, would be that you have the aspect that you have customers that started out, you know, and they're in tough shape. Those customers will end up building great credit. Those customers will end up buying furniture, houses, all the above. Guess what? This plan there has the potential to be much larger than, I expect, more than just the retail store. I expect how they're going to set this up is that they're not going to have to be worrying about the bouncing of checks and all of the above. Why? Because the way electronics are right now, you'll have a Walmart register, you have the green dot account, they're in one cloud. Guess what? You go in, you buy whatever you're going to buy, it's coming right off the account, end of story. You know, there's going to be what that will hit. You know, the regular Visa, MasterCard, I don't expect them to hit there are the larger, bigger banks because they don't have their business right now. What it will hit the, what is the paycheck, you know, the paycheck business. It'll hit the AMSCOT business, you know, because that's a very large business, and the fee structures in the aspect of percentage-wise of what they're doing are very high. But bottom line is that, you know, the good news is that there's going to be a lot of other people that get inside that banking structure. Now, if we look at Walmart, technically, it's up $1.50, but that doesn't do anything. Why? Because you're up with 6 million shares, and you're going into 12 million. So the bottom line is that stock-wise, it's going to take a lot longer. Apple. Now, Apple's the intriguing one out here, folks. The reason being is this. Apple, number one, is having a tough time staying over this 100.72. We're still over it by a point. Has hung over it each and every week for the past 5 weeks. Technically, when you're over it, you can go higher. There's no doubt about that. When you close under this 100.72 on a weekly basis, it would prove to be a failure. That's in the technical setup. The fundamental setup goes like this. Apple just came across, they came out with an iOS update, and they're going to pull the update. Apple pulled an update for our iPhone operating system after the new software caused some people to lose cellular service. After rolling out the latest version of iOS 8 mobile software earlier today, the California company withdrew the update when scores of customers experienced dropped cellular service, so they couldn't make phone calls. The fingerprint reading Touch ID feature also wasn't working after the update, according to some customers. So check this out, folks. This is just not today. This is not today. On this last week, okay, Bridget's daughter, Eliana, she was doing an update on a regular iPhone. What is also happening, and this was prior to today, they come out with another update last week. What was also happening there is that when you're doing the update, it was wiping out your phone, and you had to bring the iPhone and you had to bring it back to the factory settings. Now, it's not bad bringing phones back to the factory settings if, in fact, you had the cloud setting up, keeping everything, or if you're, you know, so the reality is that, okay, if it was backed up, it's fine. If it's not backed up, it's an absolute horror show. Bottom line, you know, we'll see where this shakes out, but it looks like Apple has some heavy problems in the context of software. And let me tell you something, folks. That is the last thing that customers want to hear right now. You know, why? Because we've had way too many problems with security. And if you think that your phone may get wiped out from doing an upgrade, I think we depend on our phones way too much. I mean, I use my phone more as a computer than I use my own computers even in the office. The reason being is that, you know, between the financial company and the real estate company, we have a lot of guys on the road. Bottom line is that that's the communication device to get things done very quickly, and it works. You know, those small types of characters work very quickly, and I suspect I'm not the only one that is using the phone as a computer more than the actual computers. Why? Because it's in your pocket, and, you know, depending on how many hours you're going a day, going 15, 16 hours, whatever that is, you're not carrying a computer around. You don't have to. There's no reason to. So we'll see where Apple shakes out in this, and I expect what you're going to see is that more than likely, you know, this will end up being a gap down, gap away, because it's been hanging up here. You know, even this coming across the tape, this came across the tape maybe an hour ago. It still hasn't done anything. What is intriguing is this, though. What I suspect forced the hand of this was a worker for CNBC. What ended up happening, I saw this about 5 hours ago, someone that works for CNBC had downloaded the iOS 8, and the bottom line that they lost their service. So what did CNBC end up doing? CNBC ended up calling Apple, and Apple wouldn't comment on the deal. And then the next thing you know, coming across the tape was that Apple turned around and just basically said, okay, we're going to withdraw this whole deal, you know. So it's going to be wild watching this whole baby shake out and see will that basically, you know, push Apple a little bit lower, that folks get a little bit worried about it. We go take a look at the XLE, which has been getting hammered out here. So the XLE out here today, monster volume. Now check this out. The XLE is up 20 cents. We got to 90.76, and it has 22 million shares. When you have a high volume low like that, folks, you're going right after it again. You know, this hasn't done a thing. You know, got down to 90.76, making its way back. And if we go over and we take a look at one of the larger weighting structures in it, which would be Chevron. Chevron was down $3 earlier. It's only down 51 cents right now. Broke the swing point with 5.4 million shares, did 6.3. Chevron, guess what? It's going to be down there too. ExxonMobil, which is the largest weighting structure inside the XLE, is coming into the first place that, yeah, it get a little support, but Exxon's already come down from 104 to 95. And when you take a look at this setup, what we have is that we have a high volume low that is hanging out there at 88, 89. And so watch this. That is the February 5th level. Now, this is important to understand because the S&P itself, even though it's stayed up, has been up at these highs since July, February 5th is still the benchmark on the S&P. Well, for ExxonMobil, that come down off 105, hit 94. That is on its way to 89. And the point of that is that you get ExxonMobil going after its February 5th benchmark. That is a large cap that if we had talked about that, you know, 2 months ago, it's like, no, it's not going after that. There's no way it can go after that. Why? Because, you know, it's basically 12% down from where that is. You're in the oil business, you know, and all of the above, you know. So when we talk about that February 5th benchmark, that is a monster move downtown inside the S&P. That number, excuse me, folks, that number is 1737. And the high of that number is 1800, 1799. But 1799 is still almost 200 points down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrial's up 148. NASDAQ up 43. S&P's up 18.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Right now, you get the Dow up 156. NASDAQ is up 45. S&Ps are up 19. And percentage-wise, what you have out here is that you get the Dow up 0.9%, S&P's up 0.8, and NASDAQ is up a 1/10. Or 1% rather, sorry, 1%. Go over to the small caps and look at the small caps for a second, because the small caps have not been able to get out of their way and continue not to be able to get out of their way. Right now, you get the small. If we look at the IWM, that IWM is trading at 111.91. Some of the high-volume stocks in this low-volume market, this is what we have happening out here. You have, that's a Citizens Financial went public today. That's up $1.40. It's trading out at 22.98. You get BAC, Bank of America, up 13 cents. Yahoo is up 85. We have Micron Tech up $1. Twitter is up 90 cents. KB Home is down 91 cents. Inside the Dow Industrials, what we have is that, let me pull this up. This is going to be an easier way, because when we pulled it up earlier, there's still three that, there's only three out of all the Dow stocks that are actually in the red, folks. You get Chevron, which is down 62 cents. GE is off 9 cents. And you get ExxonMobil down 14. We go over to DuPont. We take a look at DuPont DD. DD right now is topside once again. This has been a rocket ship from $64. It's at 74 right now, and I believe they're trying to break this company up, right? That's what's going on. We'll see where the whole baby does shake out, but if we take a look at DuPont, we put this on a monthly basis. What you have is that we're back to the 1999 highs. This is pretty intense. Yeah, it's going to go after them. It's pretty wild. So your high in 1999 was $84, and the low of the high on a monthly basis was 71.85. So right now you're a point into that number, and that's on a monthly. But what you also are is that you actually have the juice behind the move. So DuPont's going to do a full 100% move or move. Pretty amazing, because when you look at it, the high was $84. It traded at $40 for years, from 2000 to 2008. And the financial debacle goes down to $16 and then makes its way all the way back. And inside that area, you get a 2.5% yield. So Verizon, we go take a look at a few of these phone companies out here. Verizon right now is at $50, and we pull this back and we take a look at this on a monthly basis. This also is making a run for its highs. The phone companies have finally figured it out, folks. That's the bottom line. The highs in 1999 rather, was $62. 55 with the lows, 62 is the high. Now, these phone companies pay a fortune now. The phone companies, right now, Verizon's paying a 4.3% dividend. So there's no doubt that's a big number inside the dividend world for, companies that are taking in a fortune that you don't have to, not worry is not the right term inside the marketplace. But when you take a look at the phone companies, the cash that they take in is extraordinary, meaning Verizon right now is taking in $32 billion a quarter. $32 billion. Ma Bell, we go take a look at Ma Bell. Ma Bell, let's see what Ma Bell takes in. Because you figure they broke it up and they're patching it back together. Oh, look at that. They're almost the same size. Ma Bell takes in $35 billion a quarter. So almost the same size. The difference is, if you're going to buy one versus the other, folks, it's Verizon. What you have is that Verizon's much stronger than T. That's just the way it's set up. Of course, it's a different company when Ma Bell was Ma Bell, but that's how that baby is set up. As we come into the close out here today, folks, let's take a look at what we have happening. If we take a look at these E-minis, the future market out here, ES. Yesterday, coming into that close, you had that operator throw some big numbers at the close. Thus far, we're still up $18. What the market did do is that, it basically it had got up to this 1992 area, and that's where, basically there was someone threw some contracts into the market on the 22nd of 22nd of September. Didn't quite make it over there. So we'll see where the whole baby does shake out. If you go over to the FTSE, we take a look at the FTSE. FTSE out here bounced. That was up 30 bucks. That's nothing compared to how it went down, though. DAX in Germany, that rejected lower price. I suspect we'll get the volume a little bit later, but I suspect it had lighter volume. If we go overseas and we take a look at last night overseas, the Hang Seng couldn't get out of its way. The Hang Seng was up 84 bucks, but no action there. The Nikkei in Japan, bottom line, down $38. We take a look at Shanghai in China. Shanghai was up 1.4%, and that each and every bounce in Shanghai basically has been sold. We'll see if this one ends up getting sold also. The way that Shanghai has been trading, it's off its highs of 6,100 or 2,300, and you know, the last swing point up here, that's what it's actually going after right now, and that swing is 24.44, and we're at 23.43 right now. Don't forget, folks, if you'd like to come into our trading contest, it's absolutely free. We're giving away $10,000 in cash. You have to register by tomorrow at noontime. If you know any friends out there, tell them. Tell them to get over here. We're going to have a great time trading. That contest next week, $3,000 first prize, 15 second, 750 third, 500 for the next two, 250 for the next 5 after that. And then what you do have is that each and every trading day, just putting a trade on, you have a shot to win $100 in cash plus the art of timing the trade. After the close out here, we're going to be coming out with a few numbers, and we'll see exactly how these babies are shaking out. And let's see, the risk out here is King Dollar. You know, King Dollar is the number out here. You get King Dollar. We're at 85.16. It got over the highs. Bottom line, if that runs to 89 without a break, folks, the cool thing is that, you know, everyone in the U.S., you have dollars. Great. Guess what, folks? Dollars are strong like bull, and that's one of these deals that you don't even have to trade. And the aspect of you go to another country, and guess what? You're going to basically do very well. I expect that's going to continue. Why the euro? You know, I expect the euro to bounce a little and the dollar basically to pull back a little. But the euro right now at 127. This thing's going to, on a, 4 to 5 years from now, it's going to be par. Next stop for the euro is this 122. We're at 127. It's pretty intense. This is Tom O'Brien. This is TFNN. Dow Industrials right now up 158. Nasdaq up 46. S&P's up 19.5. You stay right there, folks. We're going to be right back. Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This card is by Chuck Knox. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We had the Dow Industrials up 154, Nasdaq up 46, S&P's up 18.5, gold contract down $4.50, trading at $1,217 an ounce. Silver down 9 cents at $17.68 an ounce. Platinum down 13 at $1,318 an ounce. Copper flat at $3.05 a pound. Light sweet crude up $1.49 at $93.05. Bonds, you had the 10-year down 7 ticks, 30-year off 15. Both of those folks down with light volume. The 10-year right now is at 124.09. 30-year is at 136.30. King Dollar up 376 ticks at 85.15. King Dollar took out her swing points. Bottom line is King Dollar is going to run to 89, and she does it quick. Watch out, world. Euro down 63 cents at 63 ticks rather. At 127.83, the euro does want to go to 122. Dollar wants to go to 189. Bottom line is going to take a rest in between it. Yen, 109.04. Our phone number is 927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, we got $15. But check this out. What we actually did, folks, is we made a lower low with volume. You did 730 million versus this 718. And watch where there's harmony in this. This is going to be interesting watching how this shakes out. A little bit earlier, you did have lighter volume, but now what has happened is volume came in. So you got into this 1982. Now, the swing point's 1978. Well, what was that saying? What it means is that, yep, you had heavier volume going into the swing, rejected price, but that means you're going to be right back down, challenging that area once again. And here's the correlation. This is with the correlation, which is pretty wild. If I go right to the NASDAQ, what you have inside the NASDAQ is that we take a look at this correlation inside the NASDAQ, and the NASDAQ had 1.7 billion shares. That little baby, let me just make sure I got this right now. That little baby going into the 16th, I believe the same occurrence just happened. So we go back to the 16th. Oh, okay, so the NASDAQ had lighter volume. S&P's had heavier volume. NASDAQ did 1.75 versus 1.879. So you have divergence there still inside those indices. We take a look at the SPY, the SPY. What we had with the SPY is this. The SPY did 101 million shares. You're going into the 76 million, but realistically, I got to take the 117 million prior day. Why? Because when you're that close, you stay conservative. You want the higher volume characteristic. So the index itself had heavier volume when you take a look at it. The SPY had lighter volume. The 3Qs, the NDX 100, we take a look at the NDX 100, what we had with the NDX 100. That had 34 million shares, and you were going into 38 million. So the NDX 100 also had lighter volume. So what that sets up on the NDX, we're at 99.84. That basically sets up that, you know, you can get to that high. It'd be amazing if it does, but it absolutely sets that up. Gold contract. We take a look at gold. What we have with gold is this. Gold back down today, 440. Had a high out there of 1226, a low of 1216. That is lighter volume, you know, than the aspect of the low that was established out here at 1208. What you also have, though, is that you're already into the high of that low. So that says the 1208 is game again inside that gold market. The bond market, what we have with bonds is that flat market out here today came back, lighter volume, bonds are building cause for higher price. Now, King Dollar, folks, King Dollar is the number out here in the market as to where it wants to go, what it wants to do. King Dollar has gone straight up from 79 to 85. That's almost unheard of, by the way. You took out swing points today, took them out with lighter volume, but needless to say, you took them out. The longer-term deal on King Dollar wants to go to 89. You know, it's already 100% move. So if you're bullish on King Dollar, the aspect of, you know, getting to 89, I expect, is there on a longer-term basis. If we go to 89, folks, on a non-stop basis, which you very well could, you know, by the way, if King Dollar is up on like another 300 ticks tomorrow, we're going there. Because you're over the swing point right now by, let's see, 45, by 200 ticks. You get over the swing point by 500 ticks, this 89 is glaring. You go to the 89 quickly, oh, man, it's going to throw some wrenches in markets, period, right across the world. Why? Because of that currency risk is absolutely huge. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, I gotta read this. You know, we at the Tigers Den, and you know I'm a bear, of course, right? And a couple of the Tigers that were in there saying, you know, Tom, you must like the Chicago Bears football team. Go Bears. And I said, oh, man, I need my jacket. Because you know, if you were watching Tiger TV a couple days ago, folks, I had my jacket on because it was so cold in here. So I was putting there, I need my jacket because I got to go back in my bear cave, right? And he sends me over a joke. I gotta read this joke, folks. It's hilarious. So he says, Tom, you got to take a day like today and with a big smile. It could be worse. Now, here's the joke. A woman called the police and said, my husband has been missing for a week. The police said to prepare for the worst. So she had to go down to the Goodwill to get all his clothes back. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of some of the high-volume stocks, let's take a look at them out here. So you had Apple down 91 cents. Now, we'll come back to Apple. Apple's going to be intriguing. Why? Because technically it's 100.72. That's the number on a weekly close. It's been closed over. It has closed over that for 5 weeks straight. No volume, but it's closed over that. Intraday today, Apple pulled back its software update for the iOS 8 because they were getting complaints throughout the day that if you upgraded to the iOS 8, what would end up happening is that you'd lose your cell service. Pretty good, right? Micron Tech up $1.02. You had Cisco up 28 cents. Sirius Satellite was up 5. Citizens Financial went public out here today. That was up $1.58. The Dow stocks. Inside the Dow, you did have the oil and gas sector. That was the weakest structure inside that. Other than that, just about every Dow stock was up. We had American Express up 21 cents. GM was up 43. Caterpillar 121. Caterpillar's a dead cat bounce. DuPont was the mover out here. DuPont was up $1.79. Oxy was up $1.95. Let me go over to Oxy for a second. Oxy must have got some juice into it right at the close because it certainly wasn't up that much. So, yeah, Oxy got juice into it at 3 o'clock. It went from 97.25 up to 99, and then back to 98. Yeah, that's a dead cat bounce. The XLF, we take a look at the financials. The XLEs are still weak. The XLF, that rejected lower price today, and let's see if we had volume. This is interesting. So the XLF actually had a higher volume day also. Lower low, higher volume, 35 million shares. That sets up that, we can do a bounce up there to 23.59. You're at 23.46. Even 23.67, because he did have 51 million shares up there. I suspect more likely we're going to see that get up to that level, and then we'll see whether it can make it and or break it. Inside the Dow Industrials out here, well, here, let's go inside the NDX 100 first. Inside the strength inside the NDX 100 today was Bed Bath & Beyond. That was up 464, and then you had the biotechs. Vertex Pharmaceutical was up 7%. That was up $7 at 111. Alexa Pharmaceutical was up $10, and you had Biogen up $14. And if we do look at the IBB, and we go look at this IBB, you stay right there, folks. It's Tom O'Brien. This is TFNN. We're going to come right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 154, Nasdaq up 46, S&P's up 18. Let's go to Michael in Toronto. Hey, Michael, what's going on?
Hi, thanks for taking my call.
Sure, thanks for calling, man. Thanks for holding. What are we going to look at?
Yeah, the ticker symbol is SCO.
SCO. So this is the ProShares Crude Oil Exchange Traded Fund that seeks the investment results that correspond to twice the inverse, meaning the opposite daily performance, whether positive or negative, of the benchmark. This is always a confusing one too, folks. Okay, so this moves at twice the inverse correlation of where oil is going. So let's go right over to the oil market first, and we'll take a look at as to what we're looking at out here today. So we're looking at the CLX4.
Yeah,
it was up $1.30 today, and we did 267,000 contracts. So in that correlation, Michael, it's like, okay, we can bounce to 95.07. Right now you're at 92.87. You did have an expansion of volume. It's like, okay, so you're going to get up to this 94.87 area. So
you have an expansion of volume because it's the front month.
I understand.
Okay.
Yeah. Well, I do these all the time. It doesn't matter. That's what people are trading is the front month.
Okay.
If it's, so if you go over to the SCO, and by the way, when you're trading that SCO, you're trading the front month.
Mm-hmm.
Okay, so it's the same correlation. So if you're looking at the SCO, so what are you looking to do with the SCO?
That's why I was calling. I was figuring out, is this a short-term top for the SCO? And then
yeah.
Okay.
Yeah. I mean,
how much downside pressure do you see?
27.99, which isn't a lot from where we are.
Oh, I see. That's a high volume low. Okay.
Yeah. Okay. So this is a decent vehicle. but it's confusing in the aspect, folks. Now, see, I want to show you something. Now, watch this, folks, when I put this all the way back. This vehicle here absolutely is a day trading vehicle, and you better make sure that and do it that way. So watch. Let me just show you something here. This vehicle here, if I put this back on a weekly, I'm going to put it back 5 years first. So when I put it back 5 years, all it's done is gone down, right, from 93 to 29, right? If I put this on, I don't think they've been allowed on for 10 years, but the longest I've put it, it has gone from $298 in 09. You know, now watch why that has to happen. Now this vehicle here, folks, it doesn't have to happen, but the probability that it does happen is dramatic, and this is why. When I read this again for you, this is not like a normal ETF that, you know, whether it's a pro share or a direction share, that it is an inverse, meaning a bull or a bear fund, okay? What this is it is going to go 200% opposite movement of what that oil contract does every day. So if the oil contract goes up, this is going to go down 200%. If the oil contract goes down, this is going to go up 200%. Well, guess what, folks? When you have a vehicle like that, it's great for a day trading product, but you're absolutely going to lose money over the course of time. And the reason being is that mathematically, what ends up happening is that if you go down 10% and you go back up 10%, you're still down. And so we know that oil fluctuates back and forth. It's amazing to me that the SEC ever let something like this vehicle here actually come out there. But that's the bottom line. So I've traded it. I don't mind it. But when you do this one, this is not one you want to hold at all, period. Not even close.
Okay.
Have a great one, Mitt. Have a safe one. Oh, yeah, that's interesting. Here, let me pull that back up again, man. Oh, man, I love it. You're so right. One of the tigers in the den is saying, then just shot it. And you're right. There's no doubt about that, man. That's crazy. Because over the period of time, that is it. I mean, we know that it fluctuates back and forth, and that math behind it is there. That's crazy. Okay, we got to find out what other ones like that. I know there's a few others like that because I've got the calls on them. And I've got, I remember when I first getting the calls, I was confused. Like, how does this work? How can it be 200% of the daily investment results? Okay, that's insanity. No, the TZA is not like that. So watch. Let's go through what the difference is. The TZA and the TNA is, well, first off, the TZA. The TZA is 300% inverse correlation of the Russell 2000. And so if we bring that up, what you're going to see with the TZA is that, the Russell's been going down, so the TZA just went from $13 to $15.75. It's still a daily investment vehicle, folks, okay? But the difference is that it's not doing the 300% inverse correlation of what something is doing on a daily basis. That is what the difference is, and that makes a difference. There's no doubt. It definitely makes a difference. VXX. Let me just see this one. The VXX. So this is a short-term ETN, exchange traded note. The note will provide investors with cash payment, scheduled maturity. No, this is not it either. Okay. We'll find some more, but that's really intriguing inside that SCO, how that thing does shake out. One of the larger news stories out here last night and this morning, and this is going to be interesting to see how this shakes out, is PIMCO. What you have is that Pacific Investment Management said it's cooperating with the regulators, examining how the firm how the firm assigned asset prices at Bill Gross's PIMCO Total Return ETF. PIMCO has been cooperating with the SEC in this non-public matter and will take regulatory obligations and responsibilities very serious. The probe is the latest hurdle faced this year by PIMCO, which is dealing with record redemptions. Gross's Total Return Mutual Fund has experienced 16 straight months of redemptions as returns trailed rivals and investors sought alternatives. Since March of 2012, the PIMCO total return ETF has returned 16% through yesterday, compared with 9.1 for the mutual fund and 5.6 for the Barclays U.S. index of bonds, according to data compiled by Bloomberg. This year, PIMCO total return ETF has advanced 5% compared to 3.6% in the mutual fund and 4.1 in the index. So what they're trying to figure out, folks, is that I suspect what they're trying to figure out is that how is this fund up so dramatically more? The issues being probed by the SEC include whether the $3.6 billion exchange-traded fund bought investments at discounted prices while relying on higher valuations for the assets when the fund calculated the value of the holdings, the Wall Street Journal reported yesterday, citing unidentified people familiar with the matter. The SEC probe into pricing issues at PIMCO have been going on for months, according to the newspaper, which also said the SEC investigations have interviewed Gross. So check this out. This is how this can work. You stay right there, folks. I just want to, I'll lay this out, how, what I think they're actually looking at. I don't know, but I'll lay out what I actually think they're looking at. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. You stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrial's up 154, Nasdaq up 46, S&P's up 18. And, you know, check this story out. This is a pretty cool story, folks, okay? But when you're looking at first, PIMCO. Let's go through PIMCO first. Okay, so the SEC is investigating PIMCO. And, you know, when I read through those numbers, meaning that the PIMCO numbers are much larger than the other numbers that these other funds have. Okay, that's what it comes down to. So how could that happen? Well, what ends up happening, folks, is this. Picture how you get a picture how big PIMCO is, number one. They're in the trillions, not in the billions. That's how much they run. And looking at the story, when I look at what is not said, well, actually what's said in here, what's said in here is that they thought that they got some assets that were discounted. Now, the way that they would do that is this. They have a lot of different funds, right? They could make a deal between one fund and another fund and sell off that asset at a discount. The asset goes into the fund. The numbers come out in the fund, and guess what? The numbers are better, right? So what ends up happening when numbers are better inside a fund as large as PIMCO? The numbers go up astronomically. The amount of money that they take in the fund is insane, meaning huge, huge, huge money, okay? That makes up for the aspect of the numbers coming in, and guess what? The fund itself, okay, and this is where it's going to get intriguing as to where the SEC is going with this, because if in fact that's what they did, they're going to be in big trouble, because the discount aspect of it, someone lost on the discount aspect of it, first off, didn't get full price. On the aspect of the actual fund, that's probably just against the regulation. The people that bought that fund wouldn't lose because they want them to win more, but they get more money into that arena. That's what that comes down to. Now, check this one out. This is for all you gold bugs out here. This is a great little story. And what this is about Venezuela. So this came across the tape today. Francisco Rodriguez, an economist at the Bank of America, was at a routine meeting with Venezuela Central Bank officials last week when he sprang an unusual question on them. Can you show me your gold? He's been itching to take a peek for years, and now was the right time to ask. The government bonds are sinking towards prices that indicate investors are bracing for the possibility of default. That's what's happening right now in Venezuela. The bonds in Venezuela right now, folks, are paying 15 to 18%. Big numbers. The country's $15 billion of gold bars are crucial to ensuring debt payments are made. His first impression, once inside the vault, those bars don't take up a lot of room. You picture that the amount of money requiring a lot of space, when in reality, it all fits in 5 small cells that were not even full to the top. Rodriguez, a Venezuelan native who covers the Adriana economies for the Bank of America Corporation in New York, said in a telephone interview yesterday. He said he started counting frantically in his head, summing up figures scrawled out on the signs near each pile of the metal. By his quick count, the gold was all there. Rodriguez said that while he's remained optimistic about the Venezuelan ability to keep servicing its debt, he's been getting nervous phone calls from investors amid the rout that has sent the country benchmark bonds to as low as 67 cents on the dollar last week. One client was even worried that the gold might have vanished from the vaults, a concern that Rodriguez said helped push him to ask the stockpile question. Gold accounts, so check this out, gold accounts for 71% of Venezuela's $21.4 billion of foreign reserves, according to the World Gold Council. About $13 billion of the gold is held at the central bank in downtown Caracas. Another $2 billion is at the Bank of England, according to Rodriguez. Those gold assets have grown in importance as Venezuela's overall foreign currency plunged 34% in the past 5 years. That reserve depletion has contributed to the sell-off in Venezuela bonds in recent months, as the rout has deepened. Earlier this month, the president has sought to reassure creditors since September 10th that the government will pay back its debt down to the last dollar. Now, so check this out, okay? This is where this gets really wild. Okay, so listen, I actually believe that the gold is there, okay? But if you want to play the deviant side of this whole deal, you know, this guy made a huge risk coming out there and saying that. The reason being is that if, in fact, a country was going to sell their gold, or anyone was going to sell their gold, and it was supposed to be in a vault, what do you think they'd do? Well, they sell their gold, and they're going to basically put other gold bars in there that are not gold bars. And so the bottom line is that just because he went in there and saw something that looked like gold bars doesn't mean it's there. We're talking gold. Let's go to Dave in Clearwater. Dave, what's going on?
Hey, Tom. How you doing, buddy?
I'm doing great, man. You having a good day?
Yes, sir. Yes, sir. It's I'll tell you, I would be shocked if it's not there, because normally when you got that kind of bullying going on, there's usually an SKR that goes along with it. So,
yes.
Some insurance companies on the hook if it really is not there.
Yeah, no. Listen, I think it is there. I'm just explaining that. You know, when I first read it, I said, this doesn't mean a thing. You know what I mean? You know, you walk in, and you know, I've been in plenty of gold shows that, you know, people have been peddling basically gold fairy dust. You know what I mean? So.
Oh, sure, no doubt about it. Hey, I was listening to the show. Good show. And I'll tell you, the other thing they got to worry about going back to that SCO, as with any commodity exchange-traded fund, is, you know, when you're holding it more than, you know, on a daily investment vehicle standpoint, when the contracts get rolled over, you got, you know, backwardation and or contango risk, depending on whether you're long or short.
Right.
And, man, I mean, if you hit it right and the trend hits, and you hold it longer in a day, I mean, you can make some nice cabbage, but you got to keep an eye on the contract in a huge way.
And when Dave is saying keep an eye on the contract, we're talking about keep an eye on the contract even when you're in the bathroom, folks.
Oh, are you kidding me? You're walking around staring at a terminal.
There's no doubt.
Absolutely,
there's
man.
no doubt. You know,
you live, eat, and breathe just like you're trading the futures exchange. Oh, no, you know that, man.
There's no doubt, man.
Yeah, no doubt about it. But hey, listen, man. One of the questions I want to ask you is generically regarding gold.
Yep.
And I think, hopefully, man, I think because not to take up too much time, I think the dollar is going to top out at about 85.39 and 85.30 to 85.40 range, something like that. It's forming a real nice 2.618 expansion on the original ADB up.
Okay.
But the thing that I'll tell you, this is a general statement I'm making, Tom.
Yeah.
I've noticed a trend over the last couple of years now. For example, huge trend line number one, we see the deal between that lunatic in Russia and the Chinese on denominating the natural gas, get that huge deal in rubles and or yuan.
Okay.
In addition to that, that's one huge one. There's lots of medium-sized ones, but that's a huge one. Here's another huge one. I don't know if you caught it or not. Reuters had a small article, which I'm surprised it didn't make the cover of the Journal or Barron's or whatever. It had basically stating that the London Metal Exchange is going to accept yuan, Chinese yuan, as a settlement currency on their deals. And I'm just thinking to myself, man, normally, usually it's pounds or dollars normally, usually mostly dollars.
That's correct.
And I'm thinking to myself that, well, there's no doubt dollar's gotten a lot stronger, and because, we're in a better shape economically, and without going into the geopolitics of the European Union and that situation that's going on over there, Tom, I'm telling you, man, it makes me wonder if the days of any one currency, including King Dollar, really dominating the trades in the metals and as well as commodities in general. It makes me wonder what the long-term case is for USD, since we're losing that status,
Yeah, but listen, I think that's two separate questions. I don't think we're losing that status at all. I think it's got much stronger, and it's going to get a lot stronger. And if we broke it down, that has to do with politically, entrepreneurially, it's like, where are you going to go? The Euro's done. China's still, basically a slave-driven market. When you make it in China, the first thing you do, folks, is got to get out of China.
Exactly, and everyone's heading for the edge that has any wealth to their name whatsoever.
Yeah. Now, the first part of your question, however, to me was different, and that has to do with if, in fact, you have exchanges that are accepting yuan versus dollars. Well, there's no doubt that would make that stronger. Where it comes into play, however, is at how much gold is going through there, and does other countries our players want yuan? If they have taken that in exchange for gold or U.S. dollars, they've lost money hand over fist. You know what I mean?
Right. So, to me, I'll tell you what it sees to me is that there might actually be some credence to the stories that are floating around on the internet on a currency reset going asset backed globally. It just might get right, but it'll be interesting to see how this plays out.
No, check this out. Hey, you stay right there, okay? I mean, you know what power is all about. There's no way. Well, folks, you stay right there. We're going to talk about what Dave just talked about, because that'd be great for all of us commoners, okay? That would be disaster for anyone in power. This is Dave from Clearwater, Tom from Clearwater. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. And don't forget, folks, as you're driving home tonight, we are doing a $10,000 virtual trading contest next week. You have until tomorrow at noontime to sign up. It's free. So come on over to our website tonight. Sign up tonight. Don't wait till tomorrow. The computer's basically going to shut it off at noontime tomorrow. The reason being is that we have to basically test drive this on Friday, folks, in order to hit the switch on Sunday evening. The reality is that it's going to be Monday through Friday. It's a great contest. All the details on the front page of TFNN. We're talking with our man Dave, and we're talking about the London Metal Exchange. You know what I didn't realize? I did realize, but one of the Tigers just give me a heads up again, is that, you know, the Chinese bought the London Metal Exchange, Dave, in 2012.
Yes, they did.
You know, so I can understand why they're basically, you know, accepting the yuan also. But what I just wanted to go over is that, so picture, it would be a great idea for you and me and for all the citizens and any citizens of any country if, in fact, a country would back the fiat currency with real assets. The reason I think that will never happen is that what that would do immediately, it would be stopping power from being able to manipulate and to basically give out favors and keep printing money. Do you know what I'm saying?
Absolutely. It would prevent. It would also. It would prohibit us from exporting inflation. Is what it would do.
Yeah, and so you know, you always want to be cognizant, folks, of how these structures are made, and what the. You're going to hear many politicians say that, you know, guess what? These things should be done, but the fact of the matter is. You know, you'll see them stopped in their tracks if, in fact, they think they're going to lose any type of power at all, you know. So it's wild, man. It's no doubt.
It's true enough, and that's why I think the battle is on. The flip side to it is you know, we've generated so much volume over the years, not just in the last several years, but just over the last several decades since we took one off the gold standard, that it may be required to keep, you know, to keep the value of the dollar underpinned as the velocity starts to pick up from the supply of money that's been generated, especially in the last, you know, several years here with the quantitative easing, and maybe what's needed to keep the bottom in the value of the dollar and keep inflation from going up, because things are, you know, things are getting better slowly but surely. At some point in time, the velocity is going to pick up, and when that happens, inflation is going to kick. And they're going to be in that quandary to raise rates to contain it and, you know, run the risk of choking off the real estate market and all the risks that go with that. And a non-fiat currency would go a long way in solving a lot of those problems. So it'd be interesting to see how this plays out.
Well, you know, you just brought up a great point. And you know, I was listening to, I forget who it was, someone who was in Hong Kong and in Singapore last week. And what the conversation was about, folks, is this. Is that, oh, I know, it was Faber, David Faber. I mean, Mark Faber. And Mark Faber basically is, you know, he's a bear also, folks. But what he was talking about specifically, they were talking about inflation. And, you know, he was saying inflation, they have so much inflation, folks, over in Hong Kong and Asia right now. It's insane. And it's gone up, not a small way, dramatically. And, you know, as you just said, Dave, and that's what Faber was saying, is that actually got exported. You know, that, you know, we don't have inflation here in the United States, folks. There's no doubt. I mean, things are going down. But the fact of the matter is that it has got exported. And the thing that, you know what's so crazy? So check this out. Sometimes I try to think is like, how is this genie behind this curtain so smart? Because, so picture this. And what I mean is this. When the dollar was at 121, the dollar's coming down, and that's what we needed at that particular point in our economy, folks, okay? And it's like, how did that happen? And I certainly don't think that one person does this or even, you know, a group of people do it. I think it's just how it works. And so now you can look and say, okay, this is amazing. The dollar's going back up, and we're exporting inflation now, and everyone else is paying for it. And now,
absolutely. And don't you think that's also why they want to depeg a lot of these commodities from the dollar and underpinning with the yuan, thus putting potential risk, downside risk, in USD, thus facilitating the need for an asset-backed currency, because it solves several problems all at once.
I understand that, but when you say they want to, who wants to?
Well, they as in, you know, well, I won't go into specifics. Let's just say the powers that be, the people that call the shots, the power brokers of the world, so to speak.
Yeah, see, I'd say no, because that's going to give them less power. That's my point. You see what I'm saying?
Yeah, it does. Short-term wise, it gives them less power. No two ways about it. Long-term wise, nothing like out of control inflation to give them less power too, in the sense of devaluing their assets. So there are a lot of, you know what I'm saying? Because there's no playbook for this, Tom. We've never had, you know, bringing it back to the U.S. for a minute. We've never had this degree of printing, digital printing, of course, in terms of the quantitative easing and the bonds that have been purchased over the last several years. There's no playbook for this.
No, and, I agree with that. But I agree with that for sure. But when we talk, if we're talking deficits, we're talking that the deficits have been going down dramatically, and in fact, folks, I would make the argument that if you took a look at a balance sheet, that our balance sheet has gone up dramatically, even though the deficit side or the debt side has gone up, the asset side has gone up even more. And where I'm going with that is that when you look at the aspect about what the quality of life is, because what happens is that what is the dollar value for quality of life? right? Okay,
Right.
so it's like, okay, how did we get so lucky to be born here? Or our parents got us here, our grandparents got us here, right? It's like, okay, how does that work? Then you look at the aspect, man, we could have been born in South America, which wouldn't be that bad. Could have been born in Europe. I wouldn't have been born in Europe. They're toast right now. Asia, no way, okay? Russia, forget it, okay? The Middle East, you're done. It's like, okay, so when you look at that aspect, it's like, okay, hold it, man. You know, the asset side of our balance sheet is unbelievable because there is no price on the quality of life. And, you know, it's intriguing, man. You know, it's just something to play with your head, folks, okay? Because, you know, every month there's always something different playing with your head. That's what playing with my head this month, Dave.
Absolutely. I hear you, man. I hear you. Hey,
Isn't it funny, though? I know. You know, listen, my son and I, we just had this conversation. And we had this conversation, folks, because we were talking about a bike trail that they just put in. You know this bike trail over the Courtney Campbell Bridge, right?
Yep.
So when they're putting it in, folks, it's costing millions and millions of dollars. When they're putting it in, my son's saying, I can't believe they're putting a bike trail in and spending all that money. And then he says to me, you know, he likes bike, and he says, oh, man, he says, it's amazing. I didn't like that bike trail. He says, I love that bike trail. That's worth every single penny. And I said to him, I says, that's a quality of life issue. And I said, the quality of life, there's no price tag on it. Isn't it true?
As Milton Friedman would say, the marginal social value exceeds the marginal monetary value.
I love it, baby. Hey, man, have a great one. Have a safe one. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. You stay right there.